Thing. Let's now cross to Stanbic IBTC to get a perspective on the fixed income market. Of course, there we have seen yields stabilize in the longer end of the curve, but for T-bills, we've seen a lot more interest. Standing by to give us some perspectives, Olubumi Omogoroye. She's an FX trader with Stanbic IBTC. Bumi, thank you so much for joining us. So I think a good question to ask at this point is your thoughts on where yields are going, particularly for treasury bills, because we have seen a lot more demand for T-bills recently, and a lot of people talking about the fact that particularly foreign investors are waiting on the sidelines to see the outcome of the next Fed meeting. Give us your thoughts on where yields are likely to go from here.
Thank you, Wally. Good morning. For treasury bills, we believe that yields are going to rise. What we saw yesterday was on the back of CBN announcing that they're going to conduct an OMO auction. Right. We saw that there was a reaction in the market whereby yields rose up across the curve. We expect this to continue and these levels to be maintained. Another thing we need to also note is that there will be a primary auction tomorrow, whereby we think there will be significant demand.
Right. Let's focus a bit on that primary auction. What's your expectation for that auction? I understand they should be auctioned by 150 billion naira.
True. Yeah, we have a total of about 152 billion on offer. This is actually the same amount that is maturing into the system that they are offering back. We think that the 1 year would significantly have a lot of interest on it, based on the fact that the yields they're going to print out significantly higher.
Right. Let's a quick word on the naira. Your view on where that is headed. I guess there is some concern around the naira weakness. Recently, it's down to about 100, just above 163. I think it's about 163.1 to the US dollar. So it's not in the comfort zone, if you like. So give us your thoughts on what is likely to happen next, considering that we do have an MPC meeting later on this month.
We see the FX levels being curbed relatively. What we saw was that FX closed significantly higher from Friday, closed around the 163 levels as against Friday's close of 162. But the point we need to also understand is the fact that on Friday we had some form of intervention from the central bank in order to calm the market. We've seen a bit of pressure on the FX based on the fact that there has been a re-emergence of liquidity, and also the fact that there's been a slowdown of foreign investment portfolio flows. We expect the pressure to continue in the FX market, but we also expect that there will be some form of intervention, and we also expect some oil company flows in order to curb this.
All right, you talked about the reemergence of liquidity. Of course, you're referring to the FAC allocations that were disbursed last week, and we did see the central bank react to that, and we have now seen 2 OMO auctions since then. Yesterday was the latest. Only 25 billion mopped up from the system, and the yield for the OMO bills is 12.75%. Very attractive, but the big question is what happens next in terms of, we know if we look back at the MPC's decision, a big reason for the cash reserve ratio rising for public sector deposits was to take out that liquidity so that there will be less need for these OMO auctions. Do you anticipate that we see a lot more OMO auctions going forward?
We believe that once they've been able to mop up successfully, we expect that there will also be another CRR debit coming up next week. This will take out more of the liquidity. But in the case whereby there is excess liquidity in the system, we believe that there will be tools used to mop up this liquidity, and they might thereby do some more OMO auctions.
All right, let's leave it there. Thank you so much for joining us, Bumi Omogoroye. She's an FX trader, with Stanbic IBTC, giving us her thoughts on the fixed income market. And that's where we leave it from the Open Exchange team for today.